Folks, Tesla stock is not looking good at all right now. Let's just dive into it. It's breaking a key level. It's down 8.5% as the overall markets are not looking good either. We have the S&P 500 down 0.4%, the Nasdaq's down 0.3%, the Russell's down 0.6%, as the Dow's down 0.3% as well, and we have the VIX up 2.5%. So we're going to do a quick breakdown on Tesla stock in this video, and later in the video, if we have time, we'll run through the market. So if y'all find value, hit that like button, make sure to subscribe, and don't forget to get up to 15 stocks for Moomoo. It is free money, link down below. And with that being said, cheers guys, let's dive right into it. So you all probably know at this point, Tesla reported earnings yesterday, and their earnings were decent. I mean, EPS came right in line with the estimate. I think they did 85 cents adjusted EPS, and they ended up doing revenue of around 4 billion, something like that, barely beating the estimate. But net income, guys, got destroyed. It is down 20% year over year, which is probably one of the reasons why the stock is falling, as the company's profitability is taking a hit. And in this video, we're not really going to focus on the earnings or the fundamentals. We did that more yesterday in my video last night. Go check it out. I think I titled it Tesla stock crashing after earnings, something like that. And well, now it's gotten even worse, and I want to focus on the charts in this video. So again, it is down 8.5% right now, down 15 bucks, which has to be one of the most red days Tesla has seen in recent memory. I mean, of course, this thing got destroyed back in December. You guys remember that? It was down, I think, 50% throughout the month of December. So this has to be the most red it's been since that point, at least, you know, just looking at it based on a brief glance here on the chart. So what we're noticing, guys, if I zoom in a little bit, we are taking out the lows from a couple of days ago being about 175 bucks. That's number one. And now we're testing the lows from back in the middle of March being about 164, 165 bucks, which by the looks of it, guys, we are going to fall right through that. In fact, earlier in the day, let me pull the intraday up. We actually did fall through 165 in the pre-market. We hit 164, so not a complete drop under 165, but notice how we hit 164. We saw a bit of a relief rally after that as the markets opened. That didn't last long. Now we're failing right back down to 164, 165. That's not a good sign for the bulls. The fact that we ran up, we didn't fully break out. Now we're coming back to retest that low from the pre-market and the low from a couple of weeks ago from back in the middle of March. If we do fall through this point, which by the looks of it, guys, we are. I mean, that's just what I think. In the short term, I could be wrong. We shall see. But by the looks of it, we have a death cross. We're under the moving averages. We are likely to fall under 165, and we're already under the wedge, like I said, on the 4-hour chart. We took out 175. We're under the moving averages here on this time frame. We have a death cross. It is not looking too pretty when it comes to Tesla. So the million-dollar question is, and now that I'm looking at it, guys, 165.64 held also in the end of January. You guys see that right here. So by the looks of it, if we fall under 165, this could start to bleed to, let's see, what are some key levels here that could be coming up? Let's see, maybe 147. You know, that's a big spot. That was the high from the end of January. You guys see that right here. If I zoom in a bit, that could be the next gap to fill on the downside. Maybe if that broke, we could be going down to 135, 136, which if you guys take a look here on this chart, that was the high, let's see here, from the middle of January. So that could be where we go. And mind you, we are a little oversold here. I'm not going to lie. The RSI, you can see down here, is pretty oversold. So maybe we get some sort of relief rally. I don't know if that's going to come here at 165, or it's going to come if we break 165. Let's say we go to 160, then we get the relief rally. I don't know. Time will tell, but we are a little oversold. So keep in mind, we might get a little relief rally, whether it's later today, tomorrow, some point next week, before we end up continuing to fall to the downside. Unless the technicals prove me otherwise, guys, we shall see. But as of now, this is not looking pretty. Tesla stock chart is not looking pretty. It's starting to turn to the downside, and we're holding on by a thread. The bulls are holding on by a thread at 165. It's going to be interesting. These next couple of hours, these next couple of days for the stock, it's going to be interesting because, again, if we break 165, guys, this could start falling aggressively towards the 150s, maybe it goes even under that. But again, there's an argument on the flip side that it's oversold. We're in need of a relief rally, but we're not getting any signs of the relief rally. We're not seeing any signs of the relief rally yet, so we can't get too excited about that because we're not seeing any buying pressure come in, at least as of now. And of course, we're going to do updates on Tesla, guys, so make sure to subscribe, hit that notification bell so you don't miss any of the upcoming videos, because again, we're going to be making videos on this thing as it is very volatile and going all over the place. So what do you guys think? Let me know your thoughts down below in the comments. It was a decent earnings report from, I guess, revenue standpoint, EPS, but net income, guys, not looking good at all year over year. And of course, you all know they're cutting prices of the Model 3, the Model Y. They're cutting all these prices to try and gain more market share. It makes sense. I see the strategy, right? They had a very high margin, very high price product. Now they're bringing that down. They're sacrificing margin to gain more market share. It makes sense. It makes sense to me completely, because a lot of the automotive companies out there, they can't do that. They have very low margins to begin with. If they cut margins even more, they're going to go in the red, which is not what a lot of these companies want to do. And Tesla, again, having a high margin, they're able to sacrifice that to pretty much eat these other automobile companies' lunch. At least that's the way I'm looking at it. What do you guys think? Let me know in the comments down below. And if you haven't gone up to 15 stocks yet for Moomoo, what the heck are you waiting for? The clock's ticking. Use that link down below. Open up an account. You get 1 free share of stock. If you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And if you deposit at least $1,000 onto the platform, guys, you get another 10 stocks, totaling 15 free stocks. And of course, all those links down below help out the channel. I appreciate you guys. As always, cheers. And now let's talk about the markets very quickly and see where they're trading at right now, as it is almost noon on the East Coast when I'm making this video. So right now, everything is in the red. We have the Russell down 0.6%, failing yet again to break above 1,800. You guys can see that's been a sticking point for quite some time here on the Russell. We're still failing there. We have to break 1,830 to 1,850 for this to really start to reverse to the upside, which we're not seeing any signs of that quite yet. The NASDAQ is down 0.3%. Look at that, guys. Let me pull up Triple Q to show you all, which you probably know, maybe not. I'll tell you right now. Triple Q is an ETF that essentially tracks the NASDAQ 100, right? That is what it is. And right now, it's down a little bit, 0.3%. And if we look here on the 20-day chart, let me pull this up. What we're noticing is clear consolidation and a lot of choppiness since really the beginning of this month. Really since the end of March, beginning of this month, Triple Q's been chopping around 315 to about $320. And we do have arguably an ascending triangle. You guys see this right here forming on Triple Q, which you can see higher lows being made, but at the same time, clear resistance at $320 a share. So what level are we going to break? Are we going to start breaking trend and going down to 312, 310? That's why my alerts are there. That would not be good for the bulls. Or are we going to actually see the ascending triangle play out? We take out 322 and we get a huge leg up from there, which at that point, you guys probably know my take on this. If we break 322, we're probably going to straight shoot up to $335 a share. And it all comes down to big tech earnings, guys. We had a couple companies report, Netflix, Tesla, but the big dogs, Apple, Google, Microsoft, Meta, those are coming pretty soon here, which is really going to determine the direction of Triple Q, because of course, you guys know it is a tech-heavy index. So keep your eyes on that point. Again, we've been consolidating for a couple weeks. We got to break 322 to the upside. We shall see if it does that. And on SPY, let me pull this up and show you guys. This thing has been struggling for months, literally months, at 415, 16 bucks. Right now, it's down 0.4%. It's at 412. We have to wait and see if it breaks. And you guys know we have an overarching ascending triangle. You see it here clear as day. Higher lows have been made for months, but at the same time, like I said, for months, we've been failing at 415.16. So if this breaks 415.16, initially we could probably rip to 420. That was the high from back in the end of August. And if that were to break 420, 430 could be next, which was the high from before that. That was from the middle of August. Yep, that's right. So keep your eyes on these points, guys. I'm going to set my alert at $416 a share on SPY, and we'll see where it ends up going from that point. So with that being said, guys, I'm going to wrap up the video. Let me set this alert before I forget. And yeah, I'll catch you guys in the next one. If you enjoyed it, hit the like button, subscribe. Don't forget to get your free stocks from Moomoo from Weeble, and feel free to check out my Patreon. If you guys want to be a part of the Discord, you want to see my charts and ideas throughout the day, you want to be a part of the Patreon portfolio, watch me build that, that's all down below on Patreon. And with that being said, cheers. I'll catch you all in the next video. Have a great rest of your day. I'll see you in the next one.